team, thank you for attending this session. Today we are going to start with the form number 1040 US individual tax returns. Till now we have seen very generic information that was related to tax returns, but today we are going to start with line by line. We are going to see what is the meaning, what is the requirement, what is the significance of each line that is written on the tax return. We will try to go through each schedule. We will try to go through as much as information, but mostly that is relevant to underwriting review. Not there could be some other information, especially those are related to credit. Those are where what taxes borrower are going to pay or how much credit they are getting. We won't be going through that particular information, but when it comes to about borrower income, how much income borrower are getting, yes, that all information or whatever relevant to underwriting analysis, that we will be going through each schedule, each information line by line. Okay, so let's start with the very first page of 1040, and it starts with the filing status. There are different status, like whenever an individual or someone, whenever someone file a tax return, filing the tax returns, what is the status of their filing, how whether they are filing as single or filing married, filing jointly, right, with spouse, or filing like someone could be married but filing separately. So they just need to mark the checkbox, or filing head of the household, or it's kind of qualified widow. So what is the significance of these filing status? Because whenever borrower is going to check mark on a particular type of how they are filing the tax returns, that tax slab, what type of tax slabs they qualify for, that is how that depends on their filing status. Maybe someone filing individual or someone filing as married with spouse, there could be different tax slabs for those statuses. Okay. So next is your name, whoever the individual or as with spouse they are filing, they need to write their first name and with this middle initials, as well as their last name, SSN number, then spouse name with their middle initials and last name and their SSN number. Then right? Home address, whatever address, whenever maybe it's a good catch sometimes whenever we are just going through different document, or let's suppose someone is reviewing 1003 and borrower saying that they are living at the present residence for last 4 or 5 years, right? But now when we come to tax returns, they have disclosed some other address as a home address. Now that is a good catch, right? We can ask borrower that how, if they are living on a particular address or at their present address, according to the application they are living at their present address for the last 6 years, how the previous year tax returns have been filed from different address. So these are the small catch that we need to keep an eye closely what address they are giving. Someone is then having an address of foreign country, or they are working in a foreign country, or somehow if they have foreign country address, they can file in the next line all the information that is relevant or asked in this form. Then next is dependent details. If there is any dependents, this is how we will get to know. Maybe someone is saying that they are single, they don't have any dependent, right? But in the same, whenever we come to the tax returns, there we can find out that okay, there are 2 dependents and borrower is getting a credit for those dependents. So we can ask that how, provide us the relevant documents, court documents or divorce decree, something which tells us that how by borrower there are dependents. It could be like elder, it could be child, but whenever we by going through this detail, we will get to know who are the dependents. Like they could be parents, they could be anyone else, or there could be children. If there are children, then we know that there could be, if those are, we need to check. We can dig out from different documents, and according to that we can raise concerns if there are any concerns. Then income detail. Now that is most of the personal detail, I would say, in the first page of tax returns. Let's go to the next section, that is the income detail. At the very first line it is given the W2. Line number 1, wages, salaries, tips, etc. Form number W2. Whatever appearing on the W2, that W2, we have already discussed that copy of W on the basis of W2, income earned from wages, that is being reported here. So let's suppose if there are two borrowers, both borrower are doing a job, or they are earning income from their wages. That income will be clubbed together and will be written here. So all income from wages, salaries, tips, if someone has that kind of job where they are also receiving tips, so that income will be written together in this cell, right? And what document we need to verify this income? We will be requiring their individual W2, copy of W2, right? Next is tax exempt interest. Tax exempt interest, and line number 2 has two set, number A and B. So the first point A is tax exempt interest. So here, like if someone is receiving interest, someone has saved some money in their account, and maybe saving or checking account, whatever the interest they have earned throughout the year, in the previous year. So that interest, there would be a portion of that interest that will be non-taxable. Whatever, like if someone earned 10,000 and maybe first 5,000 or 4,000, that is exempt from taxes. So that 4,000 will be written here. 4,000 amount will be written here. Rest of the 6,000, since that will be taxable amount, so that 6,000 will be written in the B section. Section B, taxable interest. And what schedule will be given, or we need to go, and if we need to go and check the breakdown, right, we can go to the schedule B. So remember, and the best convenient thing is that whatever the income they have earned, it will be written there, what schedule required. So whenever you get a chance, after going through this video, whenever you get a chance, or whenever you will be doing underwriting on any loan, whatever income you are going to borrower has considered, or whatever income we are calculating for qualification, we can simply go to the tax return, and there at the very summary page, there we will find what schedule required. So whatever schedule written there, we can directly go to that schedule, right, and take or glance those breakdowns, what income, all income, or how they have calculated income, right? We will go through those schedule, and we'll see how to calculate income from those schedule as well. First we will go through these summary pages, right? So the number 3 is qualified dividend. Qualified dividend, those are ordinary dividends. Qualified dividends means some dividends, they will be qualified for the less tax. Someone has invested money 5 years back, and after 5 years they have received dividend. Obviously after 5 years they will not be paying taxes, high taxes. If like someone has to pay normal taxes 6% or 10%, then it will be only 1 or 2% maximum. That is how. So that is whatever the amount is qualified for that lower taxes, that amount need to be written here in the A section. Otherwise, whatever the ordinary dividends, like someone received 10,000 again, and out of that 10,000, 4,000 income or dividend that received from the long-term dividends, that will be written here. So 4,000 will be here in the A section, and ordinary, on which normal taxes will be applied, that amount will need to be written in the section B. So like 6,000 again, and the same schedule need schedule B. So whenever we have applied, or someone borrower has dividend and interest income on the same schedule, first half of schedule B, interest income detail will be given, and on the second half, it will be given dividend income detail will be given. Let's go to the line number 4. Line number 4, as it's showing us IRA distribution. IRA means individual retirement account, right? Distribution. So that could also be, because it's a retirement account, so that there could be a portion, like someone is receiving 20,000 in throughout the year as a retirement income from individual account. So all the 20,000 income is not going to be taxable, right? So maybe if out of 20,000, 10,000 is exempt from taxes, there will be no taxes, and rest of 10,000, so whatever the amount is taxable will be written on the right side or on the section B, and whatever the amount that is non-taxable, that will be written in the A, and that is for pension annuities as well, like number C and number D. So if someone is receiving 10,000 pension throughout the year, out of that 10,000, 6,000 is again non-taxable and 4,000 is taxable. So that is how the right. And for the Social Security benefits, if someone is receiving a similar type of income like 10,000 or 20,000, whatever non-taxable portion of that income will be written on the A point, or on the left side, and on the B section will be written a taxable income for all. So whenever if we have to, especially however, it doesn't matter for us, but yes, whenever there is income that need to, sometimes we need to gross up income. That time, whatever the non-taxable portion, we need to come to the tax returns, and we should always verify that before grossing up any income that we assume or we think that is non-taxable income. Best way to come to the summary page of tax return or 1040, and here we should first confirm whether the entire amount is non-taxable or there is some amount that is taxable also. So if its entire amount is written in the first half on the A section or A point, then that is non-taxable, we can gross up. If that is not, then whatever the amount that is written in the A section, in that line, in that point, we can gross up that amount, and rest of the amount need to be added back without grossing up. Okay, so that is how. Now the number 6 line, capital gain or loss. If someone has sold a property, and that property was like purchased for 100,000, and now after 5 years it has been sold for 100 and maybe 10,000. So 10,000, so that is a gain. However, it's a capital gain, or if it's a loss. So if someone purchased a property for 100,000 and then sold for 90,000, so 10,000 is the loss, right? So there is some portion that borrower can get credit for that 10,000, or if that is a gain. So again, gain also going to long term or short term. If short term, I mean just 6 months back or in the same year property was purchased and sold with a profit, then that will be high. I mean, borrower need to pay taxes, and that will be slightly higher taxes. But if property was purchased 5 years back and now they just gain some profit like 10% or $10,000, and it will be slightly lower, right? So that is how the capital gain take place. Schedule D, we can go to Schedule D, and there we can find out whether it's a long-term gain or it's a short-term gain, right? Profit. Okay. Then the number 7, other income, form Schedule 1, line number 9. So till in the very first page, till the line number 7, whatever sources of income, those will be written here, and how much income they earned, whether that was non-taxable, taxable, all the details we could find here. Now other income, what are other income? We know that mostly it could be alimony, it could be child support, it could be like self-employed, different kind of, it could be like Schedule C income that we know, sole proprietorship, as it could be like S corp, that is small corporation, or it could be a partnership income. So all those income has been shifted from this page to the Schedule 1, as I told in my last session, right? So we will be going to Schedule 1, and there we will be looking what are those income, and then we will continue with this tax return, and we'll see how to calculate those incomes. So that income, the total of that income from that page, that is line number 9, I mean in the Schedule 1, from first to 8 lines, different income will be written, and at the number 9 it total will be given. That total could be written here. So that is all the portion or all the income source and income detail is given here. Now after this, adjustments and total taxes, how much taxes need to be paid out by borrower, that information is given in this page as well as in the next one. So we are not going to into that information, because that is not very much relevant to us. We will stick to this. Let's go to the second page and see what is the next page. Second page of summary, or 1040, that is mostly going to start with credit and tax lines, what tax has been estimated taxes actually need to be paid, all that, of what child credit or borrow, they received some credit or they have applied for some kind of credit. So that is mostly not relevant to us, but yes, sometimes that could be relevant, like someone has applied or has received some alimony, someone paid, and that they are getting credit. So we can get that information. If someone or if borrower is getting credit for alimony, paying for alimony or paying for child support, then that expense must be included in the liability section. So that is how different information we can get. We need to keep an eye on these lines. But we need to check. Then we need to check the refund. Refund is actually where, if throughout, if someone is wage earner and their taxes has been already deducted by their employer, and later they realize that okay, they have paid more taxes, they do not owe those taxes to be paid to the government. So they can apply refund whatever the payment they have done. They can write that information, as well as they can provide their account number where they want the refund. Then amount you owe. If someone has paid less taxes, or they need to pay taxes, then that amount could be written in this line, amount you owe. Here borrower is going to say, okay, this was the total taxes, this has been paid, and this is what the amount remaining which need to be paid. And remember, whenever we see that borrower owes some taxes and that need to be paid, right, we always need a proof from the borrower whether those taxes has been paid or not, or whether they have sufficient funds right after closing the loan in their account, so that they can pay those taxes easily, right? So that is going to be a concern for us. Now third party designated, if there is any third party designated, that information, whoever that third party, their name and their information could be written here. Signed here, I mean third party designated, someone is like has prepared, or if they received a notice especially for the amount due, and someone else want to reply or want to respond or pay those taxes, that information could be written here. Sign here, when sign here means if it has been filed jointly, then two borrowers or two applicants are going to sign here. The number 1 and number 2, both applicants need to sign and date when they need to date when this was prepared, this 1040 form was prepared or filled out, and when it was submitted. So that date is going to be here, and then their occupations. This is going to be one of the column that is going to be helped many times. Sometimes, some maybe in one loan we have borrower and co-borrower, and only borrower income has been disclosed, right? So we need to check whether co-borrower is also working somewhere, or what is their profession. So we can come straight to this page, and here in the occupation we will get to know, okay, whether both borrower are working. Maybe some, in sometimes borrower loan has been applied with only one borrower income, and we after calculations we saw that DTI is appearing very high. Borrower is not going to qualify for this loan. So we can straight away come to the tax returns, and there we can find, okay, co-borrower in the loan, her or his income is not used in this loan, but they are also working, because in occupation it will be written like someone is working as the accountant or technician, and other person could be like manager or something like that, maybe manager or associate, or working in some technical or IT, any occupation. Or if they will not be working, it could be like homemaker, right? Homemaker means spouse is not working anywhere, right? So that is how we can come to know what is their occupations, whether they are working or not, or self-employed. Whatever their occupation, we can easily get to know that information, and can proceed with our transactions. I hope. And after that, paid preparer use only. If someone has used someone like CPA, those, and they used their CPA, and CPA has prepared all these tax returns, so they are going to provide their information in this. I hope that these first two summary pages are clear to everyone. Still, if you come across any information that you need to know, please do not hesitate to continue with the